There's a shift happening, a silent rally that's rewriting the rules of the financial system. Now, we call it silent because it's not generating the usual noise you hear from the stock market. It's happening in a space most people don't watch, but its signal, it's deafening. Today, we're deconstructing the unprecedented surge in the price of gold.
So, let's start with a critical data point. The price of gold has just smashed through $5,000 an ounce for the very first time. You have to understand, this isn't just another new high. This is a whole new paradigm.
And look, this is way more than just a number flashing on a screen. For the people on the ground, the dealers who actually trade this metal day in and day out, the shock is real. As one of them put it, these are unprecedented times. When the insiders are saying prices are unbelievable, you know the signal is loud and clear.
What we're really looking at here is a price anomaly, an event so far outside the norm that it absolutely demands an investigation. So let's deconstruct what's really going on.
To really get a handle on the sheer velocity of this thing, just consider the scale. A jump of more than 60% in a single year. That's not a gradual climb. That is a vertical ascent. Now, this visual really gets to the core of why gold has value in the first place. It is incredibly finite, physically scarce. And think about it, it never rusts, it never decays. This tangible, unchangeable reality is the very foundation of its appeal.
And that inherent scarcity brings us right to gold's primary role in any modern portfolio. We're talking about its function as a safe haven asset.
The definition itself is very precise. When markets get choppy, when uncertainty is everywhere, capital just flows toward assets that are expected to hold their ground or even gain value. And gold? It's the historical archetype of this entire principle.
And this really gets to the heart of the fundamental tension, right? On one side, you've got gold. Its supply is fixed. You can't just print more of it. It has to be slowly, painstakingly mined from the earth. But on the other side, you have our modern currencies. Their supply is completely elastic. Central banks can just create more. And in an uncertain world, that distinction isn't just important. It is absolutely pivotal.
So, the big question is this just history repeating itself? To figure that out, we have to dig into the historical data to listen for the echoes of past crises.
The pattern itself is really well established. Global instability flares up, it triggers a flight to safety, and sure enough, gold prices react. This is the baseline. This is what we'd expect to see.
And we have seen this movie before, back in the late 70s with runaway inflation and oil shocks. Again in 2011 during the financial crisis and all those fears that the Eurozone might just collapse. We even saw a smaller spike in 2020 when the pandemic hit. Every single crisis leaves its own signature in the price of gold.
But this is where it gets interesting. This is the anomaly. When you actually plot this data out and you adjust for inflation, the spike we're seeing right now absolutely dwarfs everything that's come before. I mean, that COVID spike is just a tiny blip in comparison. So the crucial point, the real takeaway here, something is very different this time around.
Which leads us to the absolute core of our investigation. If past crises can't explain the sheer scale of this rally, then we have to identify the new, modern accelerants. What is fueling this unprecedented move?
So let's ask the question directly. If the signal is this strong, what is the underlying systemic stress that's causing it? What are investors seeing on the horizon that's making them run to a safe haven with this kind of velocity and scale?
Well, the data is pointing to a perfect storm of factors, a whole matrix of modern anxieties. We're seeing national debt soaring to levels that really test the limits of what's possible. There are these persistent, nagging fears of future inflation just eating away at your purchasing power. And then there's a critical new factor, geopolitical uncertainty, specifically the use of the US dollar as an economic weapon. That's pushing entire nations to look for a neutral asset that's beyond any single country's control.
Okay, so let's tally the final ledger. When you put it all together, what is the ultimate meaning behind this powerful, yet silent, signal?
The conclusion is pretty clear. This isn't just some speculative frenzy. It's a calculated, deliberate retreat to safety. It's a conscious choice to take all these modern, digital, abstract fears and convert them into an ancient, trusted, and very tangible store of value.
And that leaves us with one final, critical question. You see, this rally isn't really about the price of a metal. It's a barometer of global confidence. So what is it really telling us about the stability and maybe the future of the entire global economy?